Welcome back to the channel. I'm Osborne Foreman, and this week we're going to be talking about the UK stocks I'm buying right now, including one massive riser in the portfolio and two quite significant losers as well. And if you like the video, please put one of these, help beat that YouTube video. I'd also like to say that this video is in tribute or in memory of my grandfather who passed away just a few days ago. His name was Robert Rance, an absolute legend. The FTSE 100 for the week, according to Google Finance, is down by 0.93%. The FTSE 250 is down by minus 0.31%, and the S&P 500 is down by 0.97%. My portfolio has significantly outperformed this week, and that's with a nice balance. One of my largest holdings had dropped by quite a significant portion. One of them remained stagnant, and the other one pushed up very well. My portfolio gained 3.13% this week, and it could be a good stride and a good step towards stronger performance, and maybe, just maybe, that year to date, this portfolio could just recover, and it may recover back to where we were. Although at the same time, this is just more of an ego thing. I don't really need it to recover. It's just more of a nice thing to see. It doesn't really benefit me in any way. Sure, I have a little bit more extra cash in the short term if I decided to sell, but I just would like to see it go up, really. It's just a numbers thing, but it is what it is. It's not like an emotional thing where it has to go up or I'm going to be very negative, but I hope that you understand in some way or form. Now, the second biggest diver in my portfolio this week is also my second largest position. This stock is Games Workshop. Games Workshop shares have dropped by 7.52%, and this was following their trading update, which, if I'm honest with you, was probably the most bland trading update I have ever read. They didn't provide any stats or anything, only that trading and sales remained in line with expectations. They also did reduce their dividend. They are paying out a 25 pence dividend as opposed to 50 pence this time last year. However, a lot of people would probably be disappointed by this. They've bought Games Workshop for the dividend payments, and this is a dividend cut. This is unreliable. But GAW only distribute truly surplus cash. And in fact, I'd rather they kept more cash to the side to make more money, because I feel that they can use that capital effectively for much stronger growth. Obviously, we're getting some income. Yes, obviously it is slashed from what it was, but at the same time, you can't really complain, because at least then they can build the business, grow stronger, and in the future they could always reinvest back into their dividend payments and pay more later in the year. But for the first quarter, with trading in line with expectations, it's not really that bad, but it's neither too good either. And they did mention that their margins are impacted by the likes of freighting. Freighting costs have increased, and this is certainly impacting them, especially with currency exchanges. This is not a stock that I've bought, but at the current trading range, I am very interested, and I will be watching this stock like a hawk, because if it goes a little bit lower, I certainly will be topping up this position. The top riser in the portfolio has absolutely smashed it this week. This is Argo Blockchain. Shares have gained 26.28%. And this is the NASDAQ listing. It's finally happening. This is now the time in which this will happen. And this is great news, because the NASDAQ listing means shares can push up. They can see a fair evaluation to their US listed peers. They may not see that large of a difference in their current share price, but at least then they've got that fairer valuation. We've also got much more access with US institutions and US retail investors, like those from from those from Robinhood or Webull. Those are the current accounts at the moment that cannot buy shares of ARBKF, but instead they will be able to buy shares of ARBK. There will be 7.5 million American depository shares, which is the equivalent to 75 million common shares. So this means it's basically a 10-to-1 ratio. And basically, as the shares are bought up in the US and they need more shares, it would have to be drafted from the pool in the UK. And this is a good sign, because then it could only mean there's positive price impact on the shares. This is very big news, as it also gives them access to around about £100 million in capital. this capital they could use to further fuel their growth, build up that Texas facility, and even have more ambitious plans for the future. Yes, they did have that very aggressive short-term Bitcoin-backed loan that was meant to expire in 2 months. However, they clearly knew that they were going to be raising this capital following the NASDAQ listing, and now in hindsight, it certainly makes sense. Obviously, that's about 1/3 of the overall funds that will be raised, but they still have 2/3 left, and they could be making some big acquisitions. I do hope, though, that they don't use it just to buy a bit more Bitcoin on their balance sheet, because I feel that they could do more effective means that would grow the company better over the longer term, but that's probably because I feel that Bitcoin may remain fairly stagnant for the next few years. This is not one that I've bought any more shares of. I still hold 4,001 shares, and I will start trimming profits when possible. This share will go up. I'm not going to trim too much. Small amounts here and there, take my profits, put it into cash, build up a cash position so that then I'm ready for the next dip in one of my companies or to open a new position. I will, however, over the longer term have an exposure. I want exposure to Bitcoin, I want exposure to cryptocurrency mining, and I think Argo blockchain is the best option in the UK, and so I would like to have that as a stock in my portfolio for the longer term, unless obviously the story changes. And if you'd like to sign up to my stockbroker Freetrade, you can get a free share worth up to £200 when you use my link in the description down below. So go check it out for a free share. The top diver in the entire portfolio, this is the likes of Team 17. This has been a very busy week for pretty much every single one of my stocks bar one. And basically Team 17's growth has slowed. Their revenue has only grown by 3%. And I say only, I think this is still very impressive. 2020 was yet an anomalous, yet fantastic year for the business. It was a record year for the company. And I think that there was so much more discretionary spending that Team 17 were well placed during the lockdowns to really gain a boost from this. However, now people are going out more, they're spending money on other activities. So to see that the company is still growing and maintaining that revenue higher than what it was last year, I'm bullish on. And at the same time, if shares want to just drop and go lower and lower, then I will certainly be looking to build up a position. At its current price range, I am interested, although I'm hesitant for the moment because obviously with Games Workshop around the corner, I do want some capital spare. Gross profit is actually up by 10%, and this is a good thing. And the net cash position is £66.6 million instead of 50 million that it was last year, representing more cash on the balance sheet, whether they do share buybacks or whether they go for more acquisitions like they did earlier in the year with Story Toys, the edutainment application provider. For now, I'm going to continue holding, but I will be looking to buy if shares drop a little bit lower. Ashted Group is a stock that I actually sold this week. Shares have gone up by 2.94%. I haven't sold the entire position, rather I trimmed 2 more shares. I did this to free up capital, and yeah, you may have said, actually the results were great, why are you selling this? Because I think the results are artificially inflated. This means 2020 was not the best year for Ashted Group, meaning that their revenue across the board, their financials were lower. So now obviously they're going to have 20, 30, 40% growth on this because realistically they were impacted. They had to shut down a lot of their operations during that time, or that they had to set up payment plans on their leases, so their income was drastically reduced. Don't get me wrong, their free cash flow was very impressive, but for a company of this size, I think the growth potential is certainly going to slow down, and as we get to the next year, we'll then really see how well they're doing. But overall, with their expected guidance around about 8% revenue growth, I half expect that things aren't really for me, and I'm just going to hold the position because shares have been flying up this week. Trim profits here and there, but don't exit the position too quickly. Gather that capital and reinvest it elsewhere. Talking of where I reinvested it, this stock is Boohoo. I bought 106 more shares, and Boohoo has moved by 0.038%. It was down quite heavily earlier in the week, and it managed to recover back up. Obviously, we have the results on September 30th, so that is going to be a big pressure on the share price, and it will be interesting to see how well they do. I've actually made a few more orders with the likes of Boohoo, and I've been very happy with the service. I had to return 1 or 2 products, pretty much came into my bank account within 3 to 4 days, and that's not even working days. And I've also got a few more shirts, which I'm not wearing in this video, but they are certainly of good quality, and in fact, I'm very shocked at how good they truly are. Boohoo is one I remain very, very bullish on. Share price is low. This is an opportunity, in my opinion. I'm just going to keep building this position up so that over the longer term, I have a very strong exposure to Boohoo, and I think they're a fantastic growth company, and I think that they've got a lot of potential. It will be interesting to see when they next update on their supply chain, how the progress is being made to improve ESG, and then eventually we might see those funds buy back in. I personally speculate here, but we may see quite an uptrend towards the end of the month. Results could be better than expected, and we may see even more of an uptrend and quite a good positive momentum, or we may see like good expectations before results, and then it might be in line with expectations. We may see a slight retracement. I've pretty much covered all outcomes there, so I suppose it's not really the best in the world. But I do hold just over 3,500 shares, and this is certainly my largest position by far. And at the moment, it's quite impressive at how much the portfolio has recovered. Obviously, the total value of it has been very stagnant over the last year, but now I'm hopeful that I can go back into monk mode, start spending less money, although admittedly, I did go out last night, but spend less money and then hopefully invest more. And the way to invest more is not just by spending less, but also earning more. At the start of this video, I said that it was in memorial for my grandfather, Robert Rance. This man was an absolute legend. He passed away at the age of 82, and this was likely due towards his heart. I don't want to go into too much detail. It's not really my place, but in the truth, he was the only granddad I've had or grandfather I've ever had, because the other one, I don't know where he is or really who he is. Thank you for watching. Have a fantastic weekend. Stay safe.